Welcome to the Boise Business Podcast, Episode 5, where we interview local business leaders and get real-world feedback and the processes on how they run your business. I'm your host, Reese Phillips, and today with me is my special guest, Matt Price. He's the principal at Price & Partner. Matt, can you hear me?
I can hear you. Thanks for having me.
Absolutely, Matt. How's it going today?
It's going good. Little rain, little cause to do some more work.
Well, we really do appreciate you being on, and we'll just really quickly format our processes so all of our listeners understand. Matt runs a very successful business and multiple businesses for that matter, but I'm going to have him do a real quick bio. Then I'm going to go through and ask Matt 5 questions with a few follow-up questions. And the purpose of that is really to get his understanding and his knowledge on how to be a successful business owner. So with that being said, Matt, I'm going to turn it over to you to give a real quick bio.
Yeah, thanks, Reese. Like we were talking, it's always hard to condense these crazy stories, so I'll take a shot at simplicity. Really, my story kind of begins around 2010, 11. Was living in Omaha, Nebraska. Was a wine sommelier. Long story short, was sort of dared that I couldn't make my own wine. That would subsequently lead me to moving to California, about $6,000, maybe less, and started a wine business that was basically focused on private labeling wine and building some standalone brands. And in that process, sold that back to my partners and really got a break around 2013. A gentleman had been introduced to me used to be the director at Morgan Stanley Global Private Equity. And he basically tasked me with kind of trying to understand how to do a series of wine-related acquisitions. And that kind of, where that went was I wrote a freelance M&A strategy kind of focused around vertical integration for wine brands. Morgan Stanley greenlit that, which that was shocking back at the time because I had absolutely no money. And the target acquisition was $250 million. So I would subsequently go out and find that deal as well. Moved to New York from California and really wanted to be an entrepreneur, but I also wanted to be an investment banker. And the gentleman who had tasked me with that first opportunity became a mentor of mine on the 52nd floor of the Morgan Stanley building in Manhattan. I kind of showed some interest in wanting to maybe work there, and what he told me was, this is a miserable route to success, and sort of opened the room to the boiler room. And he said, look, if you want to be the best investor, what I would recommend you do is go understand how a bunch of companies are built. And at a certain point, across many different verticals, you're going to be one of the smarter people in the room, and you're going to know what to look for. So I left that office halfway dejected because I knew that wasn't the easiest path, but that's what I started to do. Got involved with startups and growth stage companies as an advisor, and then simultaneously down the road would be the CEO of one, a couple CFO positions. And what I really am trying to always understand is the relationship between entrepreneur and investor. Why do some founders have no problem financing their companies and some others that don't? And so since 2014, Price & Partner has been the kind of the strategic lead, helping growth stage businesses get bigger, helping them finance, helping them hire, and just structure and build that business forward.
So Matt, when you had that conversation on that 52nd floor, did you have like a gut feeling that what he was saying was right? Or was it kind of one of those things just kind of was overwhelming to you as a whole?
Well, Reese, looking back, I showed up in the office building, and I don't think I was wearing flip-flops, but I was not. I certainly wasn't wearing a suit and tie. So I think when I went to the front office person, I think they thought I was lost. So I went up to his office. I think it was pretty clear that wasn't where I was going to be successful. So that answers your question.
Very nice. Well, thank you for giving that background. And it sounds like obviously with your plethora of insights and experiences, it's going to be a great interview. So with that being said, let's jump into the first question. First question I have for you, Matt, it's pretty straightforward. So where did you get the idea or concept to start this business?
Yeah, again, the concept really started, right after that interaction at Morgan Stanley. I was advising startup teams, and a lot of them had, giant CEOs and really well pedigreed people around their organization, but yet the founder and CEO didn't have any idea of how to finance the companies. And so as I kind of moved it forward, I realized that that is a struggle that, you know, a lot of people have, and that in terms of kind of how they build their business, how do they add financing to it. So the genesis really came in New York when I was, you know, basically awestruck that there were these pitch decks and people that had nothing but credibility and pedigree, but they still could not find a way to finance their companies.
And what do you think was the turning point when you had kind of that aha moment that you could do this?
Well, I think that over the years, what I've learned is that, you know, it's certainly situational. The aha moment came to me was I have a unique ability to sort of see things. I always call it kind of seeing the matrix between how to build their business and then kind of how to work with investors and finance the companies. And through, you know, I've worked with about 250 of them or a little bit more. And what I've realized is that fundraising is sort of a counterintuitive process for a lot of people. If you were raised in Boise, Idaho, there's not a lot of institutional capital there for you. And the bright side of that is you've just been able to, you've had to build a good business. You know, revenue was your investor, as they say. So, you know, again, the aha moment seems to go out every single day as you work with different teams and different founders.
Out of those 250 businesses, is there one that sticks out to you the most, that was the most inspirational to you?
You know, it was definitely, there was a couple things that I had the ability to work on, like the Core Natural Water, which sold to Dr. Pepper for $500 million. So there was a contrast between how a lot of different founders were building their businesses. And then there was the contrast of there was a select few, there's about 5 more of those that you could look and say, look, there's a lot of, the way that they did this is different than most people, and not for any particular reason other than they seemed like they really knew what they were doing. So, a lot of the things that I help people with now is I take that lens of those bigger opportunities that worked and help give founders and teams that insight knowledge that they wouldn't have had anyway. They wouldn't have had access to.
Makes sense. So I think that's a great transition to our second question. You know, when you're working with all these business owners, do you see a general theme of kind of the biggest hurdle that they face, or is it very unique to each individual vertical market?
You know, I like to do a lot of work in what I always call with the flyover founders, because again, back to the lack of institutional capital and proximity to that capital, the common theme seems like it just is there's sort of a disconnect, I think, in how a lot of entrepreneurs going about funding their business. And again, I just think that fundraising for a lot of people that don't grow up around the Kleiners and the bigger VCs, they have a lot of, they start to read TechCrunch in a lot of those publications, and it can get them they get a couple ideas about valuation, kind of ideas of what they read. Oftentimes I go back and say, look, what you don't know though is if you go read about the company that raised $25 million here and there, oftentimes 2 or 3 years later, that company is defunct. It's completely out of business. So you kind of see a cross section of, you know, founders just not necessarily knowing what they're doing and not thinking big enough on capital rounds, not building their strategies and their teams, you know, towards those, you know, to be a really big business. That said, I love working with Main Street businesses too. Businesses that don't have to be, you know, exit worthy or going to make headlines of how much they sold it for. Those operators I enjoy working with a lot because they just, their whole lives are that business, that they're not thinking about selling it and going on to the next one. And, you know, that to me is entrepreneurship for sure.
Nice. So Matt, to sum up what you said, and correct me if I'm wrong here, it sounds like they're just not thinking big enough when it comes to their strategy around their business. Is that right?
Overall, I would say yes. Again, we're talking about markets that don't have a lot of multi-exit founders in them. You know, I think the idea of sort of product market fit and what that really means, even proof of concept or minimally viable product, I think that differs place to place of kind of what people agree that those 3 things actually are. So yeah, it's I think overall, and the founders that aren't from the coasts, yeah, you do see sort of that sort of lack of bigger idea or knowing that they've got a little niche product but through the right strategy and certain channels and proper financing, they can make that really big or really profitable, often which those aren't the same thing.
Very true.
Yeah,
Sometimes people do mistake size for profitability.
absolutely.
So I think you brought up a really interesting point that I'd love your feedback on. So are you saying that an MVP in Boise, Idaho is going to be different than an MVP in New York or Seattle or LA? Is that what I'm hearing you say?
Potentially, yeah. Um, I would say that the actual concept of what minimally viable means or proof of concept means is different. Um, that said, I can say I work with two companies that are local here, both Simply Eloped and Killer Creamery, and both of those founding teams, they really went out and they didn't call that their business was an MVP or they had proof of concept until they went out and did a couple million in sales. And I think those two things, revenue solves a lot of problems. And the way that both of those companies have gone after pursuing their companies, pursuing and making money, most of which are almost profitable. So again, you probably have to ask them, but I always err on the side of let's make money and not valuation.
Nice. And I think especially here in that market, that's always going to reign supreme. Which leads us to our next question. Great segue. So with everything happening, here in the Boise area with the whole COVID-19 shutdown, what do you see happening for the local Boise business market going forward?
Oh man. Yeah. So pre-COVID things, were really interesting because you had, valuations and deal multiples at an all-time high. And the minute COVID came in, it readjusted everything. There's a book that I read several years ago that was talking about the beak of the finch. And it was essentially a couple that was staying on an island. They were studying the habitats of finch. El Nino comes in one year and dumps a bunch of rain. That led to this, these birds gorging themselves. The problem was that El Nino did not come the next year, and the average fitness of each bird, they died. And I think that is probably a decent analogy to a lot of businesses, not just in Boise, but nationally, that if you ran on, very optimistic investing and spending, your burn rates were excessively high, therefore your valuations had to be excessively high. It's really hard to stay in business when the climate changes overnight. And what I don't think a lot of people understand is that most investors, they don't realize how risky their portfolio has gotten in 5 or 6 years. They just take a step towards a little bit more riskier, optimistic investing as they go. But the minute something changes like COVID hits, that risk adjustment happens overnight. So I think it's a hard climate for entrepreneurs to understand where, a lot of them may have had deals on the table or financing in place, but that fell through. And now they're kind of, as Warren Buffett says, now that you see who's swimming naked when the tide goes out. And I feel like overall, that's what we're seeing really well right now is who's been swimming naked.
That's a great analogy. I've never heard that one before. What is your overall thought about business coming back in the local area? Do you think it's going to be a longer play, or do you think we're going to get a pretty quick snapback once we get back through this opening process?
It's funny. I've answered that question a few times recently, and I really think it's more about, at least in the work that I do, it's more about the founders and the executives and what kind of people and what kind of leaders they are. Again, I think that you're going to see some brilliant moves by some companies that are, especially in Boise, Idaho, that are by nature built to survive because they haven't had access to all that capital prior to that. So I think, what I've seen in the companies that I work with here, I have seen two shining examples of entrepreneurs that are tough, that stepped back, looked at the problem, and found ways immediately around it. And I think that type of leadership and that type of business building, those companies are going to do well all the time. Alternatively, for new founders, new products, new ideas and companies, look, if you were under, let's call it $1 million in sales, this becomes very hard now because you are talking about if your business needs outside capital to continue to grow, well, all of a sudden, you may not be as attractive as you thought you once were. And I think it's going to be interesting to watch those companies and how they rebound and how they move their companies forward, or if they move them forward at all.
Makes sense. So this leads me to another offshoot question. With somebody who's done business in California, Manhattan and all these different places, do you find it more interesting to work with founders in the local area versus the major cities, or vice versa?
Yes, I think that the work that I do, because I'm from Nebraska. I speak not Arizona State, although I think we played you guys back in the day. I like those type of people. I come from a family that was both sort of blue collar and sort of carpentry, and then also in farming. And I just think that that type of relationship and being conservative and building the business that way appeals to me. And I think those founders I work with the best with. I've worked with a bunch on the coast, and when I come in and start picking up apart valuations and take a more conservative approach, that doesn't always work well. So that's why Boise, Idaho is better for me than Palo Alto.
Nice. Well, we like to hear that. So with all the talk about this process and how you got started and where you're at now, what I'm hearing from a general theme is that, working with the right people, having the right connections, having the right mentors is really important to your growth and your businesses that you have now. So that leads me to my fourth question is, when it comes to building those mentors or those centers of influence or those referral partners, whatever you want to call them, what has been your best practice in the past to make that happen and continuously do that in different markets?
It didn't always seem like it was working at the time, but my whole thought is to be essential to people, and both from investors, founder, and also founders. So building really healthy organic relationships along the way that really didn't have an angle are so helpful today, because for the founders in Boise, I like to think that I can open up that national network and bring in the people that I like to work with that can really help their businesses. So the centers of influence are huge. They're on a micro level. The angels and stuff, the community that we have here is great, and I think that that's enough. But I think as you start to get that business aimed more like 500 to $1 million in sales, you really want to open up the entire nation in terms of talent, in terms of mentorship, in terms of opportunity. And I think what I want to continue to do is to bring more of those national founders and investors and smart people to Boise to work with me, but also to kind of just be an influence on our local companies as best they can. Bridging that national gap and bringing people here to work with local companies, or at least kind of open our local companies up to that ecosystem.
Awesome. So, one thing that I heard you say was when you first started is not coming to them with an angle. Can you elaborate on what that means a little bit more?
Yeah. So, it's oftentimes people don't trust you, right, until they know that you care. If you can, even in most sales strategies, I think everyone is more than not are opposed to sort of the hard sales tactics. And I think if people believe that you care, that's how you actually start to build trust. That's how you actually start to build productive ecosystem relationships. And I think that's something that, I could on the other hand say, yes, there wasn't always an angle. I wanted to build a community. I think that Price and Partner in its origination was to build a metaphorical town where any business could thrive, because there was, we had good founders, we had, really good strategy people, vendors, and investors. And so that was kind of always the process. That was kind of always the goal here, was to kind of build that town virtually. And the goal was the angle there was only to build a town. It wasn't to necessarily profit off one or the other. A lot of people take a different approach to the relationship building. I prefer long and solid over kind of short and flighty.
And Matt, so the quote that I literally wrote down that you just said, and I want to make sure I quote it correctly, is that people don't trust you until they know you care. Is that what you said?
Yeah. Yep.
So is that a Matt original, or where does that come from?
I'm heavily influenced by Warren Buffett and Charlie Munger. Most of the things that I might paraphrase, I would have to say I probably steal from them to some extent. But yeah, that's something that I kind of live my life by, is talk about going into some of these early stage companies, especially ones that are doing really well. There's always this inherent ability for these founders who have not had the VCs around not to trust, right? And I think that those relationships, when they know that you care, when they know that you'll add value, and then ultimately when they know that together you guys can succeed, that's really where the magic happens. But it's never quick, ever.
So can you give a real world example or a real world tool that somebody can utilize to start that relationship off with somebody?
One thing I always tell a lot of founders, and maybe this is kind of what you're getting at, is as they start talking about who they want to, investors, and we need all these investors to talk to about our company. And what they don't often realize is that the investors don't know you. And they're oftentimes looking through your presentation, not to see where you're right, but because they don't know you, to see where you're wrong. And what the advice I tell a lot of early stage people that I mentor or work with is, look, when you start, the best thing I've ever done is started to volunteer at nonprofits and really have a philanthropic angle, because you're essentially building trust with relationships in those particular towns that usually benefit you down the road. If you think about the different people that write checks to nonprofits, doing that work is a lot more trustworthy way to get to know people. It's just a longer approach, and sometimes people don't want to take that longer approach.
Oh, I think that makes sense. I think a lot of people are just so stuck in their process of trying to force feed relationships, as they say, versus taking the approach where you find a common denominator like volunteering as an option. And I think that's a great piece of advice. So we appreciate that.
Yeah, of course.
Matt, before we jump into our final question, and I know you work on referral only, but I would like the audience to have an opportunity to understand who your prototypical client is that you work with or mentor. So if you give a little spiel about that, I would love that.
One of the reasons why I love this life and this career is because I get to work with crazy people. And I think crazy people are awesome. So in some parts, if you're crazy and you've got a business idea, but you're willing to take 10 years and run all those hurdles and understand that it is not for everyone, I'm your person. Email me anytime. I love to chat with people that are underneath the threshold that I might be able to help out, really. But I love to help entrepreneurs theorize and kind of look at the industries that they're in and help. Mental health in entrepreneurs is also something that's really dear to me. And being a quasi sort of couch therapist and helping them preserve their relationships with their family. So prototypical client is anyone that's doing business 500 to over $1 million. But the people I really like to help, without any charge, are those people that are looking to build a big business and they're looking to build a career. But I'd like to help them try to do it a little bit smarter, avoid the lessons that I had to learn, and simultaneously protect their relationships, their marriages, their kids, because it's not worth it in the end if you don't have those, in my opinion.
I think you bring up a point. Sometimes you put those things on the back burners when you should have them in the forefront of your thoughts. Matt, what's your best email if people want to email you?
Yeah, it's Matt, M-A-T-T, @priceandpartner.com.
Perfect. Thank you. Well, now to my favorite question, and this is the only question I don't change on every show because I think it's very important. So what advice would you give someone looking to get into your type of business in today's ever-changing business environment?
Can you be adaptable? If you're looking at all the strengths of any, early founder or early stage team, and, somebody might be really good with the strategy or doing the technology development, but, build businesses with people you like to work with, and also that, understand that you have to be so adaptable to succeed in businesses now, especially as you're starting to build them. Things like the coronavirus can come in, ups, goods, market cycles. And if you're not an adaptable person, then I think this is very hard. So I love the people that want to be adaptable, that know that they can change what they're doing and look at a whole different way to do things if the climate adjusts.
Matt, I think you just hit on a key phrase that a lot of people don't realize, that as being an entrepreneur or somebody running a business, there's a lot of hard things that go along with it. But one of the most amazing things, and I think we as entrepreneurs forget this sometimes, is that we do get the opportunity and choice to work with who we want to. So what you said is, work with who you like. It's a big deal. And I think if more people did that and were more true about who they were as a person, they'd have better opportunities to build those real relationships and kind of grow down that path. Would you agree?
I would absolutely agree. And work with who you like is sort of vague. I would say, the entrepreneur's journey with their team or co-founder, look, it is very much like a marriage. And I think that if you don't take that approach, if you don't know that you have to invest in that relationship, that you have to learn to communicate well, you have to be willing, just like a marriage, to have a ton of tough conversations productively, being able to rebound from fights. And some of the entrepreneur partnership stories, when they go wrong, are spectacular in their detail of how they've gone wrong. So I think, being a good partner, not wishing that your partner was better, but that you can be better as a partner yourself.
Great words of wisdom. Well, Matt, I want to be respectful of your time and the listeners' time, so we're going to wrap it up there. Thank you again, Matt, for being on the show. We really do appreciate it. Thank you for the listeners for listening to episode 5 of the Boise Business Podcast, where we interview local business leaders like Matt and get their real world feedback and processes on how they run their business. I am your host, Reese Phillips. And once again, this was Matt Price, the principal at Price & Partner. Matt, thank you again for your time, my friend. Have a great rest of your day.
Thanks, Reese. It was a pleasure. Thank you.
See you guys later. Bye.